The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom and Tommy O'Brien.
Welcome, folks. We appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials up 141, Nasdaq's up 32, S&Ps are up 11.5. Gold's up $6, trading $13.2670. We have silver up 8 cents, $16.61 an ounce. Light sweet crude up 53 cents, $61.90 a barrel. Notes and bonds. You got the 10-year note up 3 ticks, 120.10. 30-year bond up 6 ticks, 143.29. King dollar down 195 ticks, 89.230. The euro is at 123.78 to 1 U.S. dollar. The yen is out here at 106.83 to 1 U.S. dollar. Inside those commodity markets, you get wheat up 1.2%. You got oil up 1.9%. Crude's up 0.8. Soybeans are up 0.7. Bottom line is that CPI comes out, gold gets a bid, Tillerson gets fired, market shakes it off. Pretty amazing market, man.
For sure.
No doubt about it.
Nothing can stop it, man.
No doubt about it, man. Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim. And don't forget, folks, every trading day right here, you want to understand the option market upside down, defined risk, strategies. He has a great show, him and his team, 11 to 12 Eastern Standard Time right here at TFNN. Kevin Hinks, what's going on?
Tom, good morning, Tommy.
How you doing, man?
Talk about today, huh?
Yes.
Oh, no doubt, man.
A few fundamental stories in the headlines you should be able to fill some time with in the program today, Kevin.
Yeah, seriously.
It just keeps coming.
It does.
It does keep coming, man, and the market just shakes it off. And it didn't even shake it off this morning. It didn't even blink.
It didn't.
You know what I mean? It was like, okay.
Tommy, this market really liked the fact that these inflation numbers are coming in line, and we're still getting some inflation. Remember that. Some
yes.
saying, well, there's no inflation. Well, no. Prices are going up.
Right.
CPI was up 0.2. It's just very moderate
it's
inflation.
Slow enough.
Right?
Yeah.
It's going up at a very slow, moderate pace, and this market, with the earnings that we've had, can absolutely digest moderately increasing interest rates.
Yeah, no, listen, I think all of us, I guess it's just like anything else. If they go up slow, then people get used to it.
Right.
Particularly people that have never seen interest rates go up before. Do you know what I mean?
Exactly.
It's like, I'm trying to figure it out, and I've seen it happen before. I can't imagine when you don't know that how much even 0.5% or 1% can actually add on. And it's not at the beginning. You know what I mean? It's like a year and a half into it. That's where it really starts sitting like, oh, no, hold it. I paid a lot of interest out here, man.
Right. Right. And make no mistake, Tom, with the thing, the Fed is going to raise rates in March.
Yes.
And they're going to keep reducing their balance sheet. And eventually, the 10-year yield's going to hit 3%.
Right.
But it's just not going to go there as quickly as everyone thought or as smoothly as everyone thought. Right? It's going to be a much more high-volume, lumpy, messy trade getting up to 3%. So that's what I think a lot of people are digesting. And, make no mistake, Tom, it's apparent that there's a lot of short bond positions out there, right? Because these bonds, they don't like going down. And if we know anything about futures, Tom, they'll go where they can hurt the most people.
Totally, man. Totally.
So and that doesn't mean you have to stay away from these futures. When I say that sometimes and people go, well, what do you mean like that? Should we stay away from them? Absolutely not. Just respect these markets.
Right.
They don't go up in a straight line, and it's not just obvious. Right? We're going to go to 3% yields eventually. It's just not going to be as fast as everyone thought.
Right. And when Kevin's talking, folks, when you've been doing this for a while, you take the whole globe. Meaning, when I say in the globe, I'm talking about just the trading aspect in general. Because what does happen is that if the large operators are on one side, which there's a lot of them on one side right now being short bonds, well, guess what? There's plenty of other large operators that are saying, guess what? I have a lot of money that I want to put to use and I want it to be safe money, and I'll park it in bonds. And that's, you know, so that's the battle, it seems, out here. And that's just not just in the United States, it's the world. You know what I mean? There's cash everywhere, man.
Right.
You know?
And think about this, Tom. My biggest discussion all along has been artificially low interest rates have been a tax on the poor and on the elderly.
Right.
Right? Because they're net savers. Well, think about all the elderly that is now seeing yields up, 2.8, 2.9%.
Yes.
That probably looks attractive to them in terms of they're searching for more risk-averse, constant income.
Yeah, they know they're going to get their money back.
Right.
That's a big deal, man.
Yeah, there's going to be demand for these bonds based on that.
Right.
Especially you have an aging U.S. population.
Yep. Yep.
So no one should be surprised that rates will go up. They're just not going to go up as fast as everyone thinks.
Yeah, no, I agree, man. I can see it. And that's great for all of us. That's
right.
That's the bottom line.
I mean, the stock market's still doing extremely well. Earnings for the first quarter, which we're winding up here, have done better than expectations. And, this economy looks like it's firing on all cylinders.
And then of course, the Nasdaq broke out Friday. I mean, that got, that NDX, I mean, that got away from that high. 7,022 was the high that it tried to take out twice, and it took it out with vengeance, man. So
we're 2% over it.
Yeah.
It's remarkable.
Yeah, right. Yeah. Right. And that's, that's what's running, the tech's running the world right now.
The Dow 30 isn't, right?
No.
I mean, seriously.
Seriously. Right.
That's a great point that, Tommy, the Dow 30 gets all the headlines.
Yep.
But you've got to be looking at the S&P 500,
yes,
the NASDAQ, and the Russell.
Yeah,
in a certain way. If I was going to pick those four, the Dow would be the last one I look at.
I agree, man.
Frankly,
yeah.
Because it's such a small sample size.
It is.
You get a much better picture of the overall economy by looking at the S&P.
It's so small, Kevin, and it's so skewed with the price weighted, too, which is just deceiving when, if you don't have a full understanding of how that can move.
Exactly.
When you get the Boeings, the Goldmans of the world that can just up and down. That's all that matters. $200, $300 stocks.
All the headlines come from, right, Tommy?
Right.
So
for sure.
Tend to look there and overreact to that when you really should be looking at bigger sample sizes for a look at the overall.
Definitely. S&P 500 across the board, probably, but NASDAQ, man, the Amazons. I mean, Larry's show, how about, 1.618, Amazon above 1,600. It's just never going to end, man. Seriously.
You gotta love it, man. Jeff Bezos, man. We were looking at yesterday, Kevin, just at his wealth just this year. I mean, it's hard to comprehend.
I mean,
man.
Amazon was just at $500 not that long ago.
Right.
Now it's at $1,600.
Right.
And
guys, let me throw a little caution to you. Remember, we got two big numbers again coming out tomorrow. We got PPI and retail sales coming out tomorrow. So, and remember, a month ago, retail sales was a pretty substantial miss in terms of retail sales. So I think that's a much anticipated number. They're looking for up 0.4 on retail sales and up 0.2 again in the PPI. So another muted inflation number from PPI, but retail sales looking for up 0.4. Remember, that was a pretty big disappointing number last month.
Yeah, totally. Nice. Listen, folks, right here, 45 minutes from now, great program, TD Ameritrade, Kevin Hinks and his crew. Just go to TFNN.com, hit Tiger TV. I'll go to YouTube, pull up TFNN. Going to be right there. Kevin, you have a great one, a safe one. Always a pleasure. Look forward to the show in 45 minutes.
Have a good day, guys.
Thanks so much. Kevin. Stay right there, folks. Tommy and I are coming right back. We have the Dow up 132, NASDAQ up 35, S&P's up 11.5. We're coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionics, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We appreciate you growling and prowling with us out here. If you haven't test drove the Nadex platform, folks, great time to do it. Come over to our website at TFNN. You'll see the banner on the top of the side. Hit the banner. Bring it up. They'll allow you to trade with paper money in the demo account. And there's some action, man, in the gold market out here.
With gold, man.
I was going to say to Kevin, you selling gold on me, man,
so
when we was on the air?
We barely, I think, almost touched 13.28, and from there we're down almost about $8. These are 5-minute bars, I believe. They are 5-minute bars. Yeah. So in the span of 10, 15 minutes, down about $8 in gold.
And this is an important place for where it's at, because this is where it looks like then when the CPI come out, that's where it took off from, right? Because it had a deep dive first, and then it took off topside.
So this would be the opening. The green bar is actually the opening bar of 8:30
cool.
with the news.
Okay.
So it
right.
ahead of the news, it actually pulled back a bit.
Yeah.
The news didn't come out. Comes out right at 8:30, right? And it did spike lower at some point in that 5-minute bar. But this is a 5-minute bar. That is the 8:30. So the open of that bar, call it 13.18, was exactly where it was prior to the news. And yeah, we're about $1 from that now, and we were $10 higher.
Yeah. So let me just. This is pretty cool. So let's GC. Let's see how we're hitting this intraday. GCJ. Okay. So we're down $1.20. Look at that move. Okay. So just bring this closer. So, I see what happens here. This is cool. Okay. So, look what this was doing. So, the first spike down this morning, folks, okay, was actually going after the spike down from...
That's Friday.
Is that Friday?
Yes.
That's cool. Okay, so that's 13.13.
Excuse me.
And we had, in the 10-minute, 3,800 contracts. We come down, and we come down with 2,700 contracts. No, 2,600. And now we come down and we're testing that with 6,700. Now that's it.
No, it was. I think you had the wrong volume tick on the second one.
On the second one, okay, right there, right. 20,000, right?
Yeah.
Okay,
you said 6,000.
Okay, yeah, 20,000. 26, 26.
Okay.
So, we'll see where that shakes out. But that's a normal retracement and something that's just gone higher. Now let's go over to the dollar, because I'm sure this is the correlation. This dollar index probably is, yep. So the dollar just went the opposite way. So now let's look at the dollar. Yep. Okay, so I'll bring this closer. So first spike on the dollar has some good juice, 2,600.
So that's the 840 bar that you're looking at there.
Yeah.
Just to put things, there was that 830 bar on the initial news. The bigger volume bar is 10 minutes into the 840 bar.
Right. And now we're coming up and testing with 1,038 on the first bar. We're on the second right now. So the way this is set up, I mean, you know, you're testing the highs here too with lighter volume, and you know. And
what I was just going to say is that what happened is that, so the 830 bar was the CPI.
Yeah.
The news on Tillerson broke within this 840 bar. So you're getting both of that. And that volume is actually, I believe, more for the Tillerson, for the dollar, for the Secretary of State.
Right.
Because that was breaking literally 845, 844, I believe, was when that news broke, Eastern time.
Yeah.
Yeah.
Shake it right off, man.
Oh.
Shake it right off.
We'll see. I mean, they're going to have those confirmation hearings. That should be pretty interesting for Pompeo in terms of the confirmation hearings, and he's going to get asked plenty of questions that are going to contradict what Trump has to say in terms of foreign policy, Russia, and so that's at least going to be in the limelight in terms of what he has to say there, and he needs to be confirmed. And Secretary of State, we'll see how that plays out, but it will be some interesting television and interesting reality TV, to say the least, and how he answers those questions.
So when they're
not that even plays into the market, but either way, that's going to play into the news, the constant kind of distractions that this administration is dealing with, and so forth.
What I'm wondering is that, see, when you're already in the cabinet, do you have to go get?
Oh, yes.
Again?
You can't just like swap out positions, because they're different positions. You know, you can't go from Energy Secretary to Secretary of State and say they're already approved, because they're much different positions in terms of what you are. And is the CIA director actually a cabinet position?
Yeah, yeah. That's why they were before they were saying that's why he had a shot at getting it, because he already got confirmed. You know what I mean? I just know whether you got to get confirmed again for the aspect of it.
I don't know if it's technically a cabinet position, even if it takes confirmation to put things in the same.
Right. No, I
so it's not a cabinet
different.
position.
Right. It's not CIA.
I don't think it is.
Okay.
But it needs confirmation, but it's not a cabinet position. You know, where the president's cabinet, as in you can remain CIA director across presidential, you know, from one president to the next, I believe.
Right.
That's not how the cabinet works. You know what I mean? The president brings in his cabinet.
Right.
We'll look it up, but that's I'm pretty sure.
Like, imagine you go from the head of Exxon.
I know. I wonder his feelings with that year of tumultuous.
Oh my God.
If that ended up being worth it. I mean, it's very admirable to be Secretary of State. You know, there's.
But only a year. It's like, you know, after you give up a company that he was at Exxon forever. Like, you know, he grew up at Exxon, so you're talking. This is like, $288 billion and gross $295 billion.
But also, what happened? He got to vest all his shares right away when he left. So there was quite a bankroll that came his way as a result of that.
Yeah. So let's look that back, because that is a big number, man. So a year ago. Yeah.
Yeah, and it might have even been before somewhere right around here.
He's at $90 versus $75.
That's a big haircut. $15 on a $90 stock.
Huge.
Right. And it might have taken years after right now even to vest.
Yeah.
You know.
Yeah. No, there's no doubt, man.
Yeah.
There's no doubt. That's pretty intense.
Yeah.
Dick's Sporting Goods. This is, you know, Kevin was just bringing up the aspect of retail,
right?
Man. Holy cow. I mean, you know, when you first look at this, it doesn't look that bad. You know, like, okay, $30, right? $35, $30.42. But then you pull it back, it's like this was a $62 stock, you know, a year and a half ago.
Pretty remarkable.
Yeah, and
Dick's around us. It's an expensive store, man.
It's
an expensive store. And when you talk about T-shirts, shorts, sporting goods. You know, there's a lot more in there, you know, in terms of outdoor activities and so forth. But
And they're paying big rents. They're big stores.
Oof, yeah, they're enormous.
And then, you know, when we look at Under Armour, you're going to see, you know, bottom line, one of the suppliers just went from $54 at $17, man.
Seems like they're in more trouble than Dick's in terms of, and they're one of the reasons that Dick's was saying they're in trouble is that Under Armour isn't doing well.
Right.
Which could be the truth. I mean, it's, you know, Under Armour's expensive product in its own right.
Oh, it is.
Do they have the same, you know, brand awareness as Nike? That's what I was going to say. As Nike? No,
look at
they don't. I mean, they don't. But they're
look
in this.
At that.
Yeah.
Nike's at highs, folks. That is pretty impressive, man. Yeah, so Under Armour was doing, well, it seemed like it was doing great, and they could get with them, and then all of a sudden something happened.
Yeah, and, you know, Under Armour was trying to go into the wearable devices, right, all that stuff, and that could still pay dividends, but not yet, that's for sure.
Unreal.
Yeah.
Stay right there, folks. Tommy and I are coming right back. We have the Dow up 174, Nasdaq's up 39, S&Ps are up 14, gold's flat, 1321. Come right back.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means the potential upside payment will be double the currency's average performance at maturity with no cap, if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is up 138. We get the Nasdaq up 31. S&P's up 11.5. So, Bitcoin. Let's go over into the Nadex platform, look at Bitcoin. It looks like it's settling down a little, which is pretty cool, man. You know?
settling down under 9,000.
Yeah, I mean, but you know what I'm saying? It's like, you know, now you're only moving $200 or $300 at a time.
I don't know. I disagree on that. I mean, we've tanked from 9,900 to 8,800 in the span of this morning from 6 in the morning till 1. That's almost a 10% move in the span of 5 hours going under 9,000.
Yeah.
That doesn't quite gel with taming to, you know, I mean, seriously, just to put it right, I mean,
yeah, no,
that's a 10% move over like 4 or 5 hours in territory under 9,000.
Yeah, I guess my point is that, you know, the last 3 days you've been the top is 9,800, the low's 83.
Yeah, I mean a little bit. I mean,
yeah,
I would disagree in that. Just in the, you know, last week we were down 20%. We just went down 10% over the span of like 5-6 hours. There is still some serious volatility here, and it's only Tuesday.
So let's take a look and see what we have. So
some volume.
We're getting numbers. This is good. You know, you get right now you get 7,700 at the CBOE, which is 1 coin apiece. At the CME, which is 5 coins, you're at 1,900. So that's big.
Like 10,000. Yeah, it's almost like 18,000 bitcoins traded on there.
Right.
And that's only 10:30 in the morning.
It's growing every day right now. So this is gonna turn into a good market. Litecoin's down 2%. You get Ripple down 71 cents. So we'll see where this whole thing's shaking out. You got Christine Lagarde. What is she saying out here? Let's see. She's talking about the dark side. Let's see, where is she? It is somewhere. Crypto, dark side. So, International Monetary Fund can play a central role in coordinating the global regulation of cryptocurrencies so they aren't used for illegal purposes, said Managing Director Christine Lagarde. I'd like to see how that works.
Right.
Seriously. In a blog on Tuesday, she cautioned about the dark side of digital cash and the potential to finance terrorism and facilitate money laundering. More needs to be done to address the threat, and the fund will play its part. Central bankers and finance chiefs from the group of 20 will discuss the regulation of cryptocurrencies when they gather next week. I just don't see how they're going to do it.
Yeah, it's going to be quite a battle when they try, no matter what, because the whole point of it is to have a decentralized network of currencies.
Right. The IMF's offer comes amid a growing chorus to improve oversight of the technology, which surged in popularity last year when the digital currency Bitcoin hit an all-time high.
So, I mean, you know, the ways, and I faintly understand this, no, you know what I mean, literally in the most superficial ways, but you have the exchanges, right? So you can begin regulating the exchanges.
Yes.
But that's a very retail aspect of cryptocurrencies. If you're really into cryptocurrencies, you're not on an exchange. You don't need to be on an exchange.
No.
Okay, so that's where it gets... And yeah, they'll regulate the exchanges.
Those little things that are worth a fortune. What do you call those clips, right? You take a crypto and put it on your clip, right?
Your clip. Talking about USB drive?
Yeah.
Your clip.
Exactly.
Your clip.
Exactly. You're all set.
Yeah, even better, you would want it off there. You would want it on paper. You don't even want it on USB
paper.
drive. Yeah.
So it's a code, right?
Exactly.
It's a code.
Yeah.
Interesting. Yeah.
Yeah.
So,
what's happening? Market up 100.
Yeah, what just happened here?
The dollar's negative again.
Let's see what's going on. We go over to the S&Ps. The S&Ps just lost 6 points. That was quick. So you're up 850. We have a high out here of 2802. And we'll see whether, you know, the S&P. So what's happening, all of these, we saw gold as well as the dollar come back and, you know, get it to strength. Now, this is going to be a big one for the S&P because this would also, you know, be saying, okay, 2788 is game. The real question is going to be, do you have any volume? Because if it breaks it with volume, then you're going to get a downdraft going.
Sure.
Let's go over to the micro and tech again. Yeah, it brought up micro and tech. There's a question in the den, is it topped out? You know, what happened here is this, is that a blow-off top, folks, it's really hard. There's not really a pure, well, I can give you the pure definition is that you get something like 5 to 10 times the volume. You know, this here sticks out, but it's certainly not that. You know, you had 138 million come in yesterday at highs, and You know, when you look at it, you get 73 million some days, 48 million. In fact, let me do it this way. If I do it this way, see how much it sticks out. Well, it's sticking out quite a bit. You know, you can, let's say average out, I don't know, it was 50 or 60 last week, 30, 40 before that. But you can see that it still sticks out. Yeah. Now, if that doesn't hold today, then you can make a case that, okay, that's, you know, basically a blow-off top. And those are dangerous. Now, the deal with a blow-off top is that they do go back to that, but it just takes months sometimes, you know what I mean? Because they're high-volume highs. So if we go inside the NDX, that's what was running it out here today. Yeah, you get Intel up 3.4%, Micron's up 3.3%, Broadcom's up 2.8%, and oh, look at Ultra Salon finally get some juice, up 2.2%. This is definitely, hey, listen to this. Oh, I didn't get this number again. I had this number. I should have took it out. You talk about not necessarily under the radar, but it had the number for Amazon taking over the beauty health business is like huge. Like it's 20.
Say the number for
like market share. It's like 20% or something. It's going up dramatically because there was an article.
The current market share that Amazon has in the beauty industry. Okay.
Exactly.
Sure.
Right. That's a monster number because that business is huge.
Definitely.
That's a big number, man.
Yes. And that is, we talk about many times. It's one of those deals where every item is identical. It's not something you need to try on. It's something that people buy on a regular basis.
Right.
That's completely identifiable. They have their brands. They have their specific kind. You can just go online, buy it every 6 months, a year, whatever it is.
I know.
Yeah.
Pretty amazing.
It is.
That's a big number.
It's interesting, too, in terms of, not a woman, I don't use makeup, but I wonder if that's something, too, where do you enjoy going into the stores, trying it out before you find that one item? Is there a time where you want to switch it up, where you do need to go in, try out lipstick,
I think
try it? You know, so there is some value to that.
I think it's both.
It is.
That they have it, but they like to,
there's both.
try it
I agree.
too,
I agree.
You know?
But it's something where I represent the case that, you know, it's completely replaceable. Maybe it's not. Maybe there's still an avenue where they can compete there, where people do enjoy. That's one of the stores.
I think the
clothing
bulk,
is similar.
I think the bulk of even the women's, I'm just watching in my own house, would be that they want to make sure that they always have it.
You know what you like.
They'll go in and shop, but guess what? They want 3 or 4 extras.
You have your staple that you always want to have some of, for sure. Right.
Yeah. So, because they're always taking each other's.
Well, when you live with as many women as you do.
No, come here. What
do you mean? Taking each other's, yeah.
Too much. Dow Industrials. Let's go take a look at the Dow Industrials out of this. So the Dow right now, giving it up, man. Let's see. 376 was the high. Ooh, that gave up quite a bit then, right? 376 for 249.
Yes, we're up about 150, 170, I believe. Oh. Yeah. I mean, we're at the lows of the session right now.
Stay right there. Tommy and I are coming right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now is up 94, Nasdaq's up 18, S&Ps are up 8.5.
So let's just go over a couple. I mean, we always go over possible trade setups. And oil Wednesdays, of course, we'll be looking at the EIA tomorrow. You got natural gas on Thursdays. But just in general, I mean, we like the spread. So taking a look, you know, we're getting some action in the Dow, that's for sure. So we're on the June contract now. Even though the Dow currently is trading 25,272, when you're looking at the futures contract, we're about 28 points higher in June, 25.3. So it's interesting where it's lining up right now. Some of the spreads, right? So risk-reward wise, you know, limited risk, it's always nice. So you have 400-point Dow spreads.
Okay.
So looking at one, starts off, you have one going right from 25,000 to 25.4. And what's interesting here, right, is if you're selling the market, I mean, look how close we are to where we are. We're within 20 Dow points, which is a blip in terms of where we've been moving. And you could sell this right now, risking 111 for a possible profit of 289. I mean, if you have a short bias in the market, that's not a bad trade in terms of the premium you're paying for a risking 1 to make 3 type of profitable situation. You know, risk reward, loss versus profit situation. Now, going even a little bit further, if you're really looking for some big movement, and, you know, guess what? You got the Secretary of State out today, you got CPI data out today, you have retail sales tomorrow. This is deep out of the money, right? Because 25.2 is the ceiling of this spread.
Okay.
But these are the types of risk rewards. You know, if you're looking for a deep out of the money option,
interesting.
You know, a deep out of the money option.
Right.
And it's not a binary, at least in this one.
It's not a binary. It's important to understand.
So, you know, your break even becomes 25,182, where you'd be selling it. Right?
Yeah.
And you have profit potential all the way down to 24.8. Well, guess what? In recent history, 400 to 500 Dow points is not out of the realm anymore.
Well, what just happened, we just went down 100 Dow points.
We did.
It just
in
bounced.
15 minutes. These are 5-minute bars. We were trading above their 25, called 380, and we went down below 25,280. 15 minutes, 100 points. So that's why, you know, you want to be aware of what kind of premium you're paying, especially, you know, in this type of, on the one to go back to the 25.4, you're selling it at 25,294, literally exactly 20 Dow points where the underlying is trading at. But man, I mean, that's not a bad risk reward if you're bearish, if you're willing to pay the premium, if you're looking for some volatility. Now, on the upside, the same exact trade exists to the upside. 25.2 is the floor. Okay, you're buying it literally 20 points again. Buying it 25,332. You're risking 132 for a profit of 268. Risking 1 to make technically 2, and for that risk reward, you're paying 20 Dow points. Not bad trades. I just want to highlight. You know, get in there. Test drive the demo, because if we get some volatility on a consistent basis, And then,
yes.
you know, it is. And then even so, then they have the major daily spread, which is 800 Dow points. This one goes from 24.8 to 25.6. We're closer to the ceiling. We're about 300 points away from the ceiling. We're about 500 points away from the floor. So if you were selling this one, you're risking, call it 300 to make 500, right? But guess what?
You're right at the market.
That's what I was just going to, exactly.
That's heavy, man. Yeah. You
So
are right at the market.
Why would you not sell there as opposed to selling in the futures market?
Exactly.
When you have a risk reward, risking 3 to make 5, selling it at market.
Yep.
Pretty cool.
Look at that.
Yeah.
That's, yeah.
No, it is, and that's where, you know, we're just so used to it. We're on it all the time.
Right.
But if you're a trader, if you're looking for optionality in what you're trading, right, defined risk, premium incorporated, there's some nice trade setups to incorporate, and it's not just on,
Can you hit that oil? Because
Yes.
when I look at that oil chart, something just happened with oil. Poof. So we just went from 61.80 to 60.49.
Yeah. And again, these are 5-minute bars across the board, and, you know, poof, where are we? We're only a minute and a half into this one. So this is 10 minutes. We go from 61.50 to 61.60. Excuse me, 60.60, 90 cents.
Yeah.
Pretty amazing.
That really is, because...
And let's just jump in and see where the commodity spreads, just out of curiosity, and crude oil lineup right now. So we'll go into the dailies. Why not give ourselves till 2:30 in crude? Yeah, pretty cool here as well. So let's just take a look. 61 to 56, okay? This would be looking for a steep decline maybe, but look how close we are to market right now. If you're going to sell this, you're selling it at 60.45 within 8 pennies of where oil is, and look at that risk reward.
Yeah.
You're
$56.
Now your loss potential is up to 61. Your profit potential is down to 56, and you have till 2:30.
Right.
And the key there is that you're only paying 10 cents in premium, because you always want to be aware that, you know, the risk reward is going to be in your favor, but that's not that much of a premium if you're bearish, if you're expectant.
Right.
Now, you know, if you want to be kind of in the middle of the spread, and this is where you'd be paying no premium, and that's the difference, okay? You choose one that goes from 58.50 to 63.50.
Yeah.
But look at the risk reward now. You're risking 300 to make 200.
Okay.
And the difference there, to pull these up, these are the two markets.
Yeah.
There's the difference. So you're selling it at 60.51 as opposed to selling it at 60.44. Is that 6 to 7 pennies worth it for you to cap your risk here or cap your risk here? And that's what you have to figure out according to your market bias.
Sure. So now let's go to the 58.50 to 63 if we're bullish rather.
Sure.
Right?
No, definitely.
So you get the market that's already pulled back.
Yep.
Look at that.
Now wait, so this is that's the one we're looking at in bearish as well. They would just be buying it.
Yeah,
right.
right.
Yeah. And same thing, you're buying in the market. I mean, you can see this. I mean, such a tight market, penny by penny.
Look at that.
You know, penny by penny,
it's
right
a
around it.
penny-wide market. That's
It kind of should be, because even though you have a $200 versus $300, you have $2 of movement against you versus $3.
Yes.
The likelihood that oil moves more than $2 from this price point by 2:30 is, I would say, almost impossible. It's not almost impossible, you know, but it's so low that there's not any premium priced in, because the market maker is saying there's almost equal risk versus equal reward on a realistic basis. But guess what? It's still nice to have it in your corner if you do, you know, in terms of you're buying it. Well, geez, you know what? That's fine. I'm going to buy it at market, and you get that one day that, who knows, man, things could happen in the Middle East.
Well,
you know what I mean? I mean, things could skyrocket in $3.
And what we're really talking about is doing this versus a future market, because it's, you know, the defined risk is there, but it's
especially
really
when you
there.
can get it at market.
Exactly.
No, for sure.
Exactly. Pretty wild.
It's not stopping, man.
No, it's not.
Yeah.
It's not.
Market getting a little bit of a bid. We're down at about 25,270. Again, this is the June futures.
Yeah.
Up about 30, 40 Dow points. We'll see. How's gold doing? A little bit of a bid off those lows. 13.23.
So it went right into the where it had the strength.
Yeah.
So thus far, that's positive. You know. Let's go take a look at some of the higher volume stocks and see what we got moving out here. So GE, oh, look at that. Okay.
Yeah, they got downgraded by J.P. Morgan, I think, or
look at that. They just took them south
saying that their dividends in question. That was what came out.
This is serious business, man. Holy cow.
They have some time to make their turnaround, and guess what? Time's not on their side as the market continually.
It's not. It's not with the amount of debt they have.
Yeah.
So you got Micron up $1.80 now. That was up $3, 3 something. So let's give them back a bit. Microsoft is down 60 cents. You get Marvell Technology off $1. U.S. Steel's down $1.50. Nvidia's up 190. Stay right there, folks. Tommy and I come right back. Dow Industrials right now trading up 94. Nasdaq up 12. S&P's up 7.5. We'll come right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors. Learn how to trade options with swim lessons. Brought to you by TD Ameritrade Thinkorswim. Next on TFNN.
Welcome back, folks. Let's go over to the Dow and see what the big movers are out here today, because, you know, we gave up 100 points, so it's going to be intriguing watching. So United Health, plus 18, Johnson & Johnson, 16, IBM, 11. These are all positive. Negative American Express, -7, Microsoft, 4, GE, 3, Disney, 3.
Yeah, this is kind of what we're talking about with Kevin, right? GE is a $14 stock.
Yeah.
If this was ever a capital weighted instead of just price weighted, you know, you have it down 3% or something like that. I mean, if you had UNH down 3%, my goodness, it'd be putting 60 negative Dow points into it. Instead, you just have GE adding 3. Because it's a $14 stock, you know?
Right.
Yeah.
It's pretty intense, actually.
Oh, for sure.
You know what I mean?
For sure.
You know, you can say these words really easy, you know, price-weighted index.
Yeah.
But to really understand it, you know, I think you got to be in the business, basically. Do you know what I mean? Or,
oh, yeah.
Or at least wrap your head around it a bit.
For
because
sure.
when we've come to these larger numbers, the weightings haven't changed, but the prices have changed, so the movement is much easier.
And what happens is, I mean, the price of a stock is actually an arbitrary number. It's inconsequential. You know, any company could do a 100-to-1 split any day, and it wouldn't change anything about the value of that company, the expectation, the earnings. Everybody would own 100 more shares than they owned at 1/100th the price. It would change nothing, except it would dramatically change the price weighting of that equity in the Dow. So it's an arbitrary number. You know, it just correlates to shares and all that stuff. But yeah, it changes things dramatically when you look at the Dow.
Stay right there, folks. We got swim lessons coming up next. Then, of course, we got our man, Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. Andy Hecht. And bottom line is that we'll see whether that Dow takes another 100. It wasn't 15 minutes for the first 100 Dow.
It was. Maybe it'll be 10 minutes for the next. Thanks, man.
Wow! Go get them, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.